Hello and thanks for tuning in to our weekly mortgage and economics segment. I'm Megan Abdelaziz, Real Estate SINY.com's mortgage and economics reporter. The mortgage rates continue to move down this week. The 30-year fixed rate is now at 4.47%. The 15-year fixed rate is at 3.53%, and the 5-year adjustable rate is at 3.41%. These drops are still from the Federal Open Market Committee's decision and also from the drop in the Treasury bond yields. Even though the Federal Open Market Committee's decision continued to help the mortgage rates, it did not help the stock markets this week. The Dow Jones and S&P 500 had 5 days of continuous drops between Thursday, September 19th and Wednesday, September 25th. For those days, the Dow Jones went from about 15,677 down to about 15,273. The S&P 500 went from about 1,727 down to about 1,692. With the stock markets down, the Treasury bond yield went down as well due to all the demand for the safer bonds. The 10-year U.S. Treasury bond yield dropped from 2.76% on that same Thursday to 2.63% by that same Wednesday. The stock markets fell because investors are worried about a government shutdown that could happen on October 1st. On Friday, September 20th, the House of Representatives, which is mostly Republicans, passed a bill that would give the federal government funds, but would also take away funds from the Affordable Care Act. The Senate, which is mainly Democrats, and President Obama won't be letting this bill slide so easily, since they want more funding for the Affordable Care Act. The bill in which they are talking about pertains to the debt ceiling that needs to be raised before October 1st. If the two parties can't come together to make an agreement before then, the government could shut down and the United States debt could go into default, which is a bad thing for everyone. Not only were investors concerned about what is happening in the government, Americans were worried too, and it caused their confidence in the economy to go down. In Gallup's latest economic confidence report that was released on Tuesday, September 24th, their two polls came back with results that were looking more negative, causing the economic confidence index to drop. The two polls in this report were based off of results between September 16th to September 22nd. The poll on Americans' net ratings of economic outlook showed results of 38% of Americans thinking that the economy is getting better, and 58% thinking that it is getting worse. The poll on Americans' net ratings of current economic conditions showed results of 18% of Americans feeling that the current conditions are good or excellent, and 37% feeling that they are poor. These results from the two polls gave Gallup an economic confidence index of -20 for that week. After seeing what is happening to the Americans' confidence and the stock markets with the debt ceiling issue, we took a look to see how the actual economy is faring. This week, we took a look at 3 housing market reports and a report on the United States GDP. The first housing market report we looked at was the S&P Case-Shiller Home Price Indices for the 10 and 20 city composites in July. This was released on Tuesday, September 24th by the S&P Dow Jones Indices. In this report for July, it showed a 1.9% increase for the 10-city composite home price index and a 1.8% increase for the 20-city composite home price index. One of the cities in these composites is New York. So we took a look and found out that the home price index increased 1.5% from June to July and 3.5% from last July. The second housing market report we looked at was from the U.S. Census Bureau and the Department of Housing and Urban Development. This report is on the new residential sales in August, which was released on Wednesday, September 25th. According to this report, there was a 7.9% increase in the amount of new single-family homes that were sold from July, and it is 12.6% higher than it was last August. The median sale price dropped to $254,600, and the average sale price dropped to $318,900. As for the new housing inventory at the end of August, there were an estimated 175,000 new homes for sale, which is slightly up from July. The last housing market report we looked at was on the pending home sales index for August, which was released by the National Association of Realtors on Thursday, September 26th. The August pending home sales index dropped to 107.7 from July, but it is still higher than it was last August at 101.8. This drop in the pending home sales index again is still due to the low inventory, higher mortgage rates, and increasing home prices. With these three housing market reports, it seems it is making a comeback, just slowly. If the inventory were to increase, we would probably see a stronger recovery for the housing market. The last economic report we looked at was on the United States gross domestic product. This is the third estimate for the second quarter of 2013, released by the Bureau of Economic Analysis on Thursday, September 26th. According to the report, the real GDP was still increasing 2.5% in the second quarter. This is the last estimate before we look into the third quarter estimates and find out the final number for the second quarter, which will be released next month. The last thing we looked at this week was how the mortgage applications are doing now that the mortgage rates have dropped some. In the Mortgage Bankers Association's weekly mortgage application survey that was released on Wednesday, September 25th, applications increased. For the week ending September 20th, their market composite index increased 5.5%, and their refinance index increased 5%. Next week, ADP's National Employment Report for September will be released, and we will find out what happened with the debt ceiling issue. So make sure you check back with us next week at trendingsiny.com and here on YouTube to see where the mortgage rates will go next. Thank you for watching, and be sure to like us on Facebook, follow us on Google+ and Twitter, and subscribe to our YouTube channel. Also, don't forget you can visit trendingsiny.com website, which is a division of realestatesiny.com, to read the full mortgage and economic report. Once again, this is Megan Abdelaziz with realestatesiny.com. Realestatesiny.com is a full-service real estate brokerage located on Staten Island. If you're looking to buy or sell your home, you can contact us at 718-966-9669, and one of our experienced agents will gladly help you. If you simply just want to browse the latest listings or keep up with the market statistics, you can visit our website at realestatesiny.com.